Okay, let's unpack this. Today we're doing a deep dive into Sarkuysan Electrolytic, Bokurs Sanayi Vetikret Ash. Looking at their corporate reports, our mission really is to sift through their 9-month consolidated results for 2025 ending September 30th and boil it down to what you, the individual investor, actually need to know about the real state of this copper giant. We're trying to look past the headlines, see what's really driving things operationally, financially from January through September 2025, especially compared to last year.
Yeah, and this one needs a bit of careful handling because you've got a company that's heavily tied to global commodity prices, copper, obviously, but also operating under these quite complex Turkish accounting rules, particularly for high inflation. So separating the core business strength from, let's say, paper gains, that's key.
Absolutely. Okay, so let's start with the basics, the foundation. Sarkuysan, I mean, they're practically an institution in this sector, right? Founded way back in 72. Trading on Borsa Istanbul, Yıldız Pazar, based out in Durica, Kosiye Ili. And they don't just, trade copper. They manufacture and trade really specialized stuff. Electrolytic copper wire, pipes, plating, lots of alloys.
That product range is really important when you actually look at their catalog. Filaments, bars, the enameled wire for motors, PV ribbon wire for solar panels, all sorts of things. It shows they aren't just betting on one end market. They use that diversity to try and smooth out the bumps you always get in the copper cycle, serving everyone from automotive to construction.
And we definitely have to talk about the market context. Copper is like their lifeblood. Over this 9-month period, the LME copper price went up, 5.46%, from around $9,767 a ton to $10,300. That's a pretty big swing in their main cost.
It is, and that's exactly why their risk management strategy is so central. You
Yeah.
have to look at that. The group specifically says they use, financial hedging instruments to handle this price volatility. I mean, for a company dealing with a raw material that can jump thousands of dollars per ton, how well those hedges work is critical for the bottom line.
And the scale of their operation is just huge. We're talking, 322 people globally. That's actually up a little bit from the end of 2024. And their exports, wow, around $700 million in export volume just in these 9 months. That's serious global reach.
Yeah, that $700 million export figure really explains why their corporate structure looks so, well, complex. It's not just their Turkish operations, like the stake in Dimasas Dukum Imaya that's 44.44%, accounted for with the equity method, by the way. They really have to be where their customers are globally.
Right, so they've got manufacturing and distribution all over. The big one seems to be Sark Wire Corp in the U.S. They own about 73% of that, making high-value wire in New York and Georgia. Then there's Sark Bulgaria AD for the EU market, running since 2019. And Bemke Kupferlectorat in Germany, more on the distribution side, it seems. It's like this a fully integrated machine built to capture those international sales.
Exactly. Vertically and horizontally integrated.
Okay, let's switch gears a bit. Governance and capital structure. The framework supposed to protect investors, the stock's 100% publicly traded, which is interesting, and a really high free float, 81.64%.
It is high. But, while the float is large, you still have these key individuals holding significant stakes. The chairman, Heriton Joe ACI, has almost 10%. Others like Shukru Kilebsi and Ibrahim Khalif MC have substantial holdings too. So it's kind of this dynamic where, yeah, it's public, but control feels still pretty concentrated among established figures.
And there was a big capital thing mid-period too, wasn't there? A capital increase?
What? Yes, that's right. September 15, 2025, they completed a pretty hefty capital increase, boosted the issued capital by 66.6666%, took it from 600 million TL up to 1 billion TL. It was within their approved ceiling of 2 billion TL, so planned. But it definitely signals something, either bolstering equity for growth or maybe managing leverage. It directly impacts how you value shareholder equity.
Okay. And digging into the governance side, the board, 13 members. And I spotted something positive here, I think. Their gender diversity ratio. 5 female members out of 13, that's almost, 38.5%? Pretty good.
Yeah, that is quite notable for the sector, actually.
Yeah.
And, standard stuff, too, like reporting liabilities for their big workforce. The activity report confirms a large long-term provision, TL 223.3 million, for employee benefits, severance pay, things like that. It's required by TFRS and Turkish labor law, but it shows they're accounting for those future obligations transparently.
Right. Okay, now, the results. This is where it gets a bit weird, almost contradictory. We're looking at what feels like a real performance paradox in these 9M 2025 numbers.
Let's just lay it out. Inflation-adjusted sales revenue, the zero. It actually went down slightly. TL 58.1 billion in 2024, down to TL 55.16 billion in 2025. So right away, pressure on the top line.
Okay, but help me square this next bit. Copper prices went up. Shouldn't they maybe get better margins, like inventory gains or something? Yet their gross profit, brute car, took a much bigger hit, dropped sharply. TL 2.73 billion last year, down to TL 2.08 billion this year. Where did that margin disappear to? Did they fail on pricing, or was it just bad timing with buying copper?
That's the million-dollar question, isn't it? Operationally, I mean. That drop strongly suggests that their input cost buying the copper just ran ahead of their ability to pass it on or manage margins effectively. And you see that confirmed when you look at the core operational result. Esas Feliad Kara operating profit, that also dropped from TL 2.32 billion down to TL 1.82 billion. That number, that's the real measure of how well they're running the actual copper business. And well, it clearly weakened.
Okay, so let me get this straight. Core operations struggled, margins got squeezed, sales were slightly down, but the final number, the net period profit for the parent company, that increased, and quite a bit, from about 560 million TL in 9M 2024 to over 706 million TL in 9M 2025. How does that happen? Based on what we just said about the business, it just doesn't track.
Welcome to the wonderful world of inflation accounting, TMS 29. This is the big twist. That surge in net profit, it's almost entirely driven by non-operational income, specifically something called the net monetary position gain. For this period in 2025, that gain was a huge TL 507.36 million.
Okay, slow down. Net monetary position gain. In simple terms, what is that? Is it real cash?
No, not cash earned from operations. It's basically an accounting adjustment required in high inflation economies. It reflects the theoretical gain a company makes by holding non-monetary assets, like inventory or property, or having liabilities while the currency loses value. It's necessary to the accounting standard, but it's not profit generated by selling more copper wire or selling it more efficiently. It's a paper gain.
Wow. So that number, 507 million.
Exactly. Realize this, that single non-operational gain accounts for nearly 72% of the reported net profit. 72%. That completely changes how you have to look at the company's earnings. The quality of those earnings is, frankly, low. The underlying copper business actually saw a significant profit slowdown, which was then masked or bailed out, if you like, by this inflation accounting effect.
Okay, that's a huge point. Let's shift to the financial health check. Liquidity, leverage, how are they holding up?
Short-term health looks
Okay.
generally stable. Current ratio is 1.45, down just a tiny bit from year-end 2024. What's maybe more comforting is the acid test ratio, the quick ratio. That one excludes inventory, which is huge for them and maybe slow to sell sometimes. That actually improves slightly, up to 0.95 from 0.91.
So even if they couldn't sell their copper stocks immediately, that quick ratio suggests they have enough cash or receivables coming in soon to cover almost all their short-term debts. That sounds like decent working capital management, despite the operational squeeze we talked about.
It does suggest some prudence there, yes.
Yeah.
But, on the other hand, the profitability ratios, they reflect that margin compression we discussed. They're down across the board. Return on total assets fell 3.28% down to 2.58%. But maybe the clearest signal for investors about increased risk is leverage. The total liabilities to equity ratio jumped quite significantly. It went from 1.22 at the end of last year to 1.43 by the end of September 2025.
Oof, 1.22 to 1.43. That's a noticeable jump. It clearly shows the company's relying more heavily on debt compared to its equity base to finance, well, everything, working capital, investments. Now, if they're using more debt, and we know they operate globally, how much of that is foreign currency debt? Are they exposed if the lira moves suddenly?
Very exposed. That's a critical point. Their total bank loans are around TL 8.53 billion. And it's spread across US dollars, euros, and Turkish lira. So yes, substantial foreign currency exposure. Which brings us back to why those financial hedging strategies we mentioned earlier aren't just nice to haves, they are absolutely essential. Any big swing in the exchange rate hits their debt servicing costs directly.
Okay, let's look at cash flow then. This often tells a different story than the income statement. And here too, there's a bit of a mystery, echoing that profit paradox. Total cash and cash equivalents looks really healthy. It increased quite a lot, up to TL 2.17 billion. But again, we need to ask, where did that cash actually come from?
And this might be the most concerning piece of the whole puzzle, actually. The cash generated from their core operating activities CFO, it just fell off a cliff, a really shocking drop. It went from TL 3.04 billion in the same period in 2024, down to only TL 460 million this year.
Wait, from over 3 billion down to less than $500 million? That's like an 85% drop in cash from just running the business day to day. What caused that collapse?
It wasn't necessarily that sales were bad, but rather huge swings in working capital items. primarily changes in trade receivables, money owed by customers, and trade payables, money they owe suppliers. It suggests maybe they had customers longer to pay, or perhaps suppliers demanded faster payment. Either way, it tied up a massive amount of operating cash. On top of that, they also spent significantly on investments. Investing cash flow, CFI, showed an outflow of TL 626 million, mostly for capital expenditures, presumably.
So the strong cash balance at the end wasn't because the copper business was humming along efficiently and generating lots of cash.
No, absolutely not. The cash balance was essentially propped up by borrowing. The big driver was financing cash flow, CFF. That showed a net inflow of TL 1.28 billion, which contrasts sharply with an outflow in the same period last year. So they clearly took on more net debt, they used their balance sheet flexibility, increased their leverage basically to cover that massive operational cash shortfall and still fund their investments.
Okay. And just quickly, a couple of important details from the footnotes, the fine print. First, their investment properties. They value these at fair value, right? TL 1.57 billion. For you as an investor, that means this value isn't being depreciated year after year, which kind of boosts their total asset figure on paper compared to using cost.
Correct. It's a valuation choice allowed by accounting standards, but it affects how you interpret the balance sheet. And second, something often overlooked but crucial for risk assessment: the total collateral, guarantees, and mortgages they've provided. In Turkish, it's called TRI. That figure remains very substantial, sitting at TL 5.87 billion. It's down slightly from year-end, but still huge. It gives you essential context about their overall financial commitments and potential off-balance sheet risks.
Okay, so let's try and tie this all together. What does it all mean? For this 9M 2025 period, on the surface, Sarkuysan looks kind of strong. They've got this diversified global footprint, they did that successful capital raise, and the headline net profit number looks really quite healthy.
It does look healthy, but dig just a little deeper, and that financial stability feels a bit like, well, maybe an illusion masking some real operational headwinds. The core business, measured by operating profit, İsas Faaliyetleri, clearly struggled with margin pressure. It dropped. And cash flow from actually running the business from operations, it pretty much collapsed, as we saw. The only reason that net income figure looks good is because of that huge non-cash, non-operational boost from inflation accounting, the net monetary position gain.
Right. So this leaves you, the listener, with a really critical thought, I think. You absolutely must question the quality of those earnings right now. Sarkuysan's current reported profitability seems heavily reliant on two things: the high inflation environment continuing and the monetary gains that result from it. So the big question is, what happens if or when the Turkish macroeconomic situation starts to stabilize? Or even if global commodity volatility just calms down? If that non-operational tailwind disappears, that's the moment the underlying operational margins have to stand on their own. And that performance, the core business performance, is the metric you really need to watch like a hawk heading into Q4 and beyond.
Exactly. Keep a very close eye on that gross profit margin in the coming quarters. Forget the net profit number for a moment. See if that gross margin improves, holds steady, or keeps falling, regardless of where copper prices go. That will tell you the real story about their pricing power and cost control.
Absolutely. A fascinating, if complicated, picture. Well, thank you for sharing your source material with us for this deep dive. We really hope this helps you make sense of these complex inflation-adjusted numbers.